everyone and welcome back to Lendy's monthly financial and property update. This month we are in August. In today's video we're going to be discussing the current housing market performance as well as the potential implications of, unfortunately, what appears to be an extended lockdown across a number of Australian states, and in particular what those lockdowns are going to do to that property market. With me today we welcome back David Hyman, our co-founder and CEO of the Lendy Group. Welcome, Dave.
Thanks, Zara. Great to be here again.
We'll dive right in, Dave. Obviously, it's a relatively tumultuous time right now, and this month we definitely started to see some tapering in that housing market growth across many states in Australia. Could you share with us some insights on this and maybe why this is the case?
Yeah, absolutely. So I might start with why and a bit of context as well. So we've obviously seen record levels of growth in the market, and just to call out a specific data point, in March this year, we saw one of the largest national increases in property prices at 2.8% for the month. Now that's obviously huge by any stretch of the imagination. And while we are seeing a tapering, that's a tapering in growth, as you rightly pointed out. We've seen that kind of pull back to around 1.6% in July, according to the CoreLogic National Home Value Index. And while that's still a really, really strong growth rate, clearly the reason that we're sort of seeing here is kind of the extended lockdowns and the snap lockdowns we're seeing across the country at the moment. Whether you're in Sydney, Melbourne, Brisbane, Adelaide, or some of the regional areas along the eastern seaboard, most of those areas have seen lockdowns, and that's certainly putting the brakes on a little bit.
Absolutely. And as you and I are sat here today in the Sydney lockdown, and there's a number of additional snap lockdowns emerging across the country, we obviously believe this will have a sort of negative impact on the market. Especially what we've seen is that auction market, but we have been here before, Dave, in 2020. So what are your thoughts around that drop-off in activity, and what could we potentially expect given, we have sort of had a version of this before?
Yeah, so look, I think as you rightly point out, we have been here before, but this time is very, very different. So if we go all the way back to 2020, there was a lot of uncertainty around a number of things. We didn't have a vaccine, we didn't know what the government was going to do in terms of stimulus measures. And there was a whole bunch of uncertainty around, how long was this going to take, and what was the pathway out. As a result, we saw clearance rates drop through the floor. We saw stock levels drop through the floor. The lockdowns meant people couldn't go to open for inspections, and consumer certainty or confidence was shot, and that led to short-time price drops as well as all the leading indicators and volume drops. This time around, as you rightly point out, it's very, very different. We've got a vaccine, we've got a national pathway out, and clearly defined vaccination targets. And we know the underlying strength of the economy, and in particular things like the GDP rate and the unemployment rate have been really, really strong off the back of the extended government stimulus. And so I think as a result, what we're actually seeing, while we have seen a tapering in the growth rate, we've actually seen some really strong underlying numbers. So clearance rates this time around are actually holding across all national cities at 75%, or sort of circa 75%. And we've even seen in Sydney who've now been in lockdown for some 8 weeks, those clearance rates still in the sort of 80% range. Now the caveat to some of this is we are seeing lower volume. So in Sydney we're seeing 500 to 600 properties come to market a week, and this time in the year, you'd normally see sort of 700 or 800 properties come to auction each week. So we're seeing withdrawal rates increase, etc. But all of that being said, the market's holding up incredibly well and showing a lot of resilience, notwithstanding the current market conditions.
Awesome. It's nice to hear a little bit of good news in the midst of a lot of bad, and hopefully, we'll have a bit more positive news in the coming weeks. Before I let you go though, Dave, as always, do you have any kind of tips, hints, tricks, or advice for our viewers out there, particularly when it comes to reviewing their finances whilst the majority of us are stuck at home in these lockdown situations?
Yeah, absolutely. And look, as we've pointed out before, it's an incredibly competitive market, and that competition has continued to heat up. And so we're seeing, as an example, if you're an owner-occupier, or so you own your house and you live in your house and you've got a reasonably good equity position, We're seeing lots and lots of lenders sub 2% at the moment, and that's just incredibly cheap money. So if you haven't reviewed your loan for a couple of years, as you point out, Zara, lots of us have more time on our hands. We might be looking after kids and doing homeschool and whatnot, but I'm sure everyone can find the time to look at reviewing their rates, because there's genuinely never been a better time to refinance. And so whether that's going to an online platform like Lendy, using a mortgage broker, to just see how you're placed in the market, or take the step to either renegotiate your rates or refinance, there's definitely never been a better time.
Thanks, Dave. Sound advice as always. For any of you out there who are thinking about refinancing, or maybe have been putting it off for a little while, make sure to jump on lendy.com.au. Thanks again for joining us. Thanks again, Dave, and we'll see you next time.